All right.
Hello and welcome to Looking at the Markets with David Modell. I am super excited about what I'm going to teach you today because it is powerful for your charts, for your trading, for your investing. And before I get started, if you need help, personalized instruction for your trading or your investing, looking at charts, looking at fundamentals, whatever it is, if you want that coaching, you can email me at davidmodell@gmail.com. It's right there on your screen right now. Okay, so let's get right into the charts because there's a combination that you want to know about if you're into chart-based trading. Now check out these candlesticks, and what I'm going to tell you can apply to, I believe, any time frame. Right now we're looking at the daily candlestick chart for Verizon, ticker symbol VZ, but as you'll see later, I'll show you a 5-minute candlestick chart, and it's equally valid whether you're using 1 minute, 3, 5 minute, whatever, 1 hour candlesticks, daily, weekly, whatever it is. Okay, so this is powerful on pretty much any time frame. And notice that these candles formed a pretty solid resistance line. Resistance is a trend line that it just keeps banging its head against it. And when you see the wicks, or sometimes the bodies just hitting up against the same horizontal level, and then it just goes down, okay? The market does not want to take it up past that level, and that's a particular trend line known as resistance. I put it in a blue dotted line here, okay? And notice that it came up to it a number of times, and then it was bearish, came down, tried to come back up to it again, and then really went down after that. But what's the difference here? Well, look at the wicks. Yes, there's a wick that went past it. It's a pretty, medium to large size wick on this one. But check it out. You have a wick here and then a big wick here. This is the powerful one, okay? When you have a strengthening resistance line, meaning it has a bunch of data points on it, okay? And then you've got a red candle. It could be green as well, but it's a little bit more powerful when it's red. When I say powerful, I mean bearish, okay? Powerfully bearish when it's red. But also look at the size of that wick. When you get that big old wick, when the market tried its hardest to push the price past that resistance line and then fell right back down that same day because it's a daily candlestick chart or whatever the period is, okay? Market tried to push it. The long side traders tried to push it up past the resistance line and they failed. That is failure right there on their part. They couldn't do it. And then it closed down here. That would be a time to take profits if you're long, or if you're a short side trader and you're thinking about going short, you might consider shorting here. Although please be careful with shorting because it is very risky, okay? You want to keep your position sizes very small if you choose to short at all. A lot of people are just long only traders, and that's cool, nothing wrong with that. But look how powerful that was. So yes, you want to see lots of data points on that resistance line, but also it makes it even more impactful, more powerful when you see that long wick and then the failure. And look what happened afterwards. It didn't happen all at once. There were some head fakes in there because, hey, stocks generally don't go straight down or straight up. It's oftentimes a staircase. It did some staircasing on the way down, okay? Let me give you another example, but on the opposite end of things. You can also work this concept with a support line. That is another type of trend line where something goes down to a certain level and then comes up, all right? And then it goes back down to it again. As you can see with this wick, came back up, went down to it again, and powerfully up. Why so powerfully here? Well, there was a wick here, sure. And the wick came down to that level here, that support level, okay? But look how bullish the action was, the price action was after this candle. And look at the candlestick's wick, also known as a shadow, okay? Some people call it a wick, some people call it a shadow. The lower wick or shadow on this one was big. The bears, the short sellers, tried to push it down below that fairly strong support level because you have 1, 2, 3 data points that I can see right here where it touched it 3 times and came back up. And they tried to push it below it, but they failed. Okay, yes, it's a red candle. This would have been even more powerful if it had been a green candle. I admit that. But still, it's a small body on that candle either way. Not a big difference between the opening and closing prices. So green or red almost doesn't matter. More important to me is how long, and how hard they tried to push the price down below that support level, and they failed. Brought it almost all the way back up. Okay, that's powerful, and at a support level at that. All right, so when you combine the wick there, the big wick there, and the multi-data point support level, that's powerful. Would have been a good time to go long. I know this is hindsight. I'm saying it would have been a good time to go long. We know it in retrospect, but still, you could have gone long here knowing all that, and you would have done quite well for yourself. This is another daily candlestick chart, by the way, for UTX, United Technologies, big company. All right. You want to see it on a 5-minute candlestick chart? Here you go, because people ask me, does this work on other time frames? So I'm telling you it can. Now, none of these things work 100% of the time, all right? Do not think that this is a perfect setup here all the time. All right, so you want to use confirmation, check out the company's fundamentals, all that good stuff. All right, make your own decisions, do your own due diligence, for goodness sake. All right, we have quite a few data points on this resistance line. It knocked up against it once with this upper wick here, and then again, it went up against it, fell down, went up against it, fell down hard, came back up, fell down, came back up again. We have a little bit of a wick here, okay? But this is a big green body on this candlestick, so it's like, uh-oh, what's happening? Is it going to break through? And then in the next 5-minute candlestick, it looked like it was going to break up above it, but by the end of that period, at the end of that 5 minutes, failure, okay? The bears failed to push it below that trend line, that resistance line, and look what happened afterwards, all right? So that is failure right there. Multiple red candles after that. All right, so another example. And yes, these things can work on multiple time frames. Again, doesn't work all the time, but it can. This is Tesla, by the way, the 5-minute candlestick chart, just to give you an example of that. So when you see the multiple data point trend line, okay, when it's been confirmed over and over, and then you get that attempt for the market is attempting to push it beyond that line but fails, you'll see probably a sizable wick or shadow there, and that is a sign perhaps to make your move. My name's David Modell. I hope you enjoyed this video. Please give it a thumbs up if you found it helpful, if you found it useful, if you want to encourage me to make more videos like this one. And thank you for clicking on my sponsored promotional videos when you see that. That really helps me out. And if you haven't subscribed yet, why not do it now, okay? And hit that notification bell on YouTube. That way you'll get notified when I put out new videos like this one. And hit me up for the coaching at davidmodell@gmail.com if you're interested in that. Thanks a lot. I appreciate it. I'll talk to you again soon.